How to protect your money in a financial collapse. Introduction. In this report, we examine the vital steps individuals can take to protect their financial well-being amidst global volatility. The importance of financial resilience cannot be overstated in times of crisis, where economic systems may falter or even freeze entirely. We focus on the strategies that will ensure liquidity, security, and adaptability during disruptions, ranging from geopolitical tensions to financial system breakdowns. Footnote: Financial resilience is critical in times of crisis, and individuals must take proactive steps to safeguard their financial well-being. The importance of liquidity. When systems freeze and digital assets become inaccessible, liquidity, the ability to access cash, becomes the most important factor in your survival. In such scenarios, having physical cash on hand is paramount. It is recommended to have at least 30 days of essential living expenses available in cash, broken down into various denominations: 20s, 10s, 5s, and especially quarters. This variety ensures that, in a crisis where digital payments fail, you will have the necessary means to conduct face-to-face transactions, such as paying for food, fuel, or other essential services. Cash should be stored in multiple places, one portion in a secure, fire-resistant safe at home, another on your person in a travel wallet, and a third off-site, for example, at a trusted friend's home or a hidden location. This redundancy ensures that, even in the event of a localized disaster, you will not be caught unprepared. Footnote: Liquidity in the form of physical cash is essential for survival during a financial blackout. Diversification with precious metals. While physical cash is crucial, it cannot serve all your needs in a long-term crisis. Precious metals, especially silver, offer a store of value that remains recognized globally, even when national currencies lose their purchasing power. It is important to focus on silver rounds or bars, specifically 1-ounce silver rounds marked as 999 fine for purity and easy tradability. Avoid numismatic coins, as they may be difficult to trade during an emergency and are often overpriced under pressure. Silver, unlike cash, holds its value across borders and in collapsed systems, providing a vital financial tool for barter or trade when digital payments fail. This form of tangible wealth offers a backup in case traditional financial systems cease to function. Footnote: Precious metals, particularly silver, provide enduring value and are vital during financial crises. Decentralized finance and peer-to-peer transactions. In an increasingly digitized world, your reliance on centralized financial systems can become a vulnerability. During widespread crises, banks may freeze assets, online platforms could be throttled, and digital identities may be compromised. Therefore, it is wise to begin dissociating from these fragile systems by setting up alternative payment methods, such as peer-to-peer apps and decentralized digital currencies. Start by establishing at least 2 peer-to-peer payment systems that do not require heavy identity verification. Preload these systems with fixed amounts, and ensure that you have offline access to credentials and QR codes. This prepares you for situations where digital infrastructure is partially functional but traditional banking systems are down. Additionally, consider maintaining a physical ledger for offline transaction tracking. Footnote: Moving away from centralized financial systems by adopting peer-to-peer tools and offline transaction records ensures financial independence during system failures. Emergency communication and crypto hardware wallets. For those who are more advanced in financial preparedness, it may be prudent to consider hardware wallets that sync over low bandwidth, shortwave, or mesh networks. These are emerging technologies that can facilitate crypto transactions even in areas with limited or no internet connectivity, such as ham radio or decentralized satellite communication systems. While these tools require technical knowledge, they represent one of the few lifelines that could still function in a complete grid-down scenario. These wallets provide cold storage for digital value, secured from both collapse and centralized control, ensuring that your digital wealth remains accessible even during the worst crises. Footnote: Hardware wallets and decentralized networks are critical tools for maintaining access to digital wealth during systemic collapse. Financial redundancy and asset protection. One of the key strategies to maintain financial security during times of crisis is to diversify your financial footprint. Relying on a single financial institution can leave you vulnerable if that institution fails. It is wise to spread your funds across multiple institutions, such as a national bank, a regional bank, and a local credit union, each with its own vulnerabilities and strengths. Ensure that each account stays well below the FDIC insurance cap of $250,000, as this ensures faster payouts in case of a bank failure. Additionally, assess which accounts allow the fastest wire transfers or provide mobile deposit features, as this will offer greater flexibility in case of an emergency. Having a safety deposit box at 2 institutions allows you to store irreplaceable items such as deeds, insurance policies, and identification documents, ensuring that you can still access these items even if digital systems collapse. Footnote: Financial redundancy across multiple institutions and safeguarding key documents in secure locations are essential strategies for protecting your assets. Credit resilience and emergency preparations. Credit can be a powerful tool, but in a crisis, it quickly becomes a double-edged sword. To avoid the trap of accumulating high-interest debt during a crisis, it is important to target high-interest liabilities, such as credit card debt and payday loans, and pay them down aggressively. Consolidating debts into a single lower-interest loan can provide greater clarity and flexibility during times of economic disruption. For secured debts, such as mortgages, take the time to understand your lender's emergency protocols. Confirm in advance what documentation is needed for forbearance and ensure that your address is updated with all creditors to avoid issues with lost communications. Having a backup credit card with no active subscriptions or autopay connections is also essential, as it provides flexibility if your main card is flagged or frozen during a crisis. Footnote: Paying down high-interest debt and ensuring access to a backup credit card are crucial steps in maintaining financial flexibility during emergencies. Conclusion: Financial resilience during times of crisis requires careful preparation and strategic diversification. By focusing on liquidity, protecting assets through physical wealth like precious metals, decentralizing your financial activities, and maintaining redundant systems, you can secure your financial future even when the global economy falters. Take proactive steps now to ensure that, when the worst happens, you can navigate the storm with clarity, flexibility, and control. Footnote: Proactive financial preparation and diversification are key to maintaining stability and security in times of global economic instability.